Hello, Uncle Jim here, coming to you from Hilton Head Island. I'm actually on vacation, but today I want to share with you something you probably don't realize you can do. That's dollar cost averaging by selling options. I'm going to go into more detail on how you can do it, and I think it actually will work better than the normal way of doing dollar cost averaging. So stay tuned. I think you're really going to enjoy what I have for you today. Let's actually jump right into it. First of all, what is dollar cost averaging? I'm going to keep it real simple. It's just a way of actually investing into the market over time, investing a certain amount of money each period. So it could be you adding maybe $100 every month or $200 or $300 every month directly into stocks. And it's really a great way to actually avoid, buying stocks when they're at their highest and selling stocks potentially when they're at the lowest. It allows you to do a little bit better over time, and it's been proven that it works quite well. So today I'm actually going to talk about how you can do dollar cost averaging with selling options. And actually, it's two pieces. It's selling put options as well as buying call options. So at the end of the video, I'm actually going to share with you a couple of the stocks I'm looking at, and I'm going to go over, how you can actually buy some options at this point, especially since we're closer to the bottom of the market than the top. And it'll allow you to do it fairly inexpensively. And then the other piece with what we're going through now with the down market and the bear market, I encourage everyone, if you're not already, be sure you have a large emergency fund. I know it saved me during these crazy times, and it actually lends quite nicely to actually doing dollar cost averaging with options. And how this works is you actually, by selling puts, you can gain some income, on a monthly basis, and you can actually take that income and put it directly into buying some really good investments, ETFs, and stocks that are potentially at really good low points that pay really good dividends. And you can actually, buy some of the calls so that you can have those called to you at a later date. And you can do it for a fraction of what it costs to actually, buy the or buy the stock, right away. To give you, for instance, if you wanted to buy Cisco, that's $40, you would need $4,000, to buy 100 shares of Cisco, but you could probably, for $200, buy a call at about the same price. So it's a combination of those two things: purchasing calls at good prices and selling puts also at good prices when the market's down, fairly low. I also find that I can sell calls too, depending on when the market bounces. So I'm not going to go into a whole lot of detail. I believe the best way to share with you guys is through examples. So let's actually jump into the examples. I've got a vertical put credit spread I'll share with you, and then I also will share with you, what it takes to actually buy a call. So stay tuned. Let's jump into that next part. Okay, I'm actually going to start out with a trade I did earlier in the week with Charles Schwab. It's a company I really like. I've sold options with them for a while and done quite well. So this is a vertical put credit spread that I decided to do, and they're currently, earlier in the week, were at 71. I believe they're still around that price. And so I decided to look at $60 expiring on December 16th with a 16 delta. So again, I'm doing lower deltas. If you look around it, the next delta is 12.6, which is 57.50, and if you go up to 62.50, it's actually a 21 delta. So this worked out quite well for me. This is what I decided to do, and it's a good chance it might expire out of the money, but I would be more than happy to own it at this price. So next, here's the actual trade. So, and I did two contracts. So I sold to open at 60, and actually I did it at 52.50 buy to open. So it's a little thinner spread, and you can see I would make 144 without any fees. And so I like having a little bit of a thinner spread, especially during the bear market. It seems to protect you on the downside. So I went ahead and I ran this, but I do want to show you something that I wasn't aware of, and maybe I just missed it, but you can expand just below on the trade page. You can expand the graph, and you can see, how your trade breaks out and what it looks like for, maximum loss, maximum profit. You can see a lot of details here, and you can see, you know, what kind of risk you're putting yourself at. Even though it shows a lot of maximum loss, that's like if you know it, a huge dive, and I don't think that's going to happen with Schwab. Schwab doesn't move in a huge range. So, but I do like this. It's just below where you make the trade. We'll go back. Let's go back to the left. It's just, if you look under here, market order, it's just below where you can expand it. So it's a nice little feature they have, that you can see more about the trade from a graphical standpoint. And then last, I reviewed the trade, and after fees it would be 141. Fees were, I think, a couple dollars to, what is that, 260, so not bad. And then I went ahead and I ran it and was able to pick up right at $140. I didn't get price improvement with it, but it was nice to pick up $140 for, in my mind, a very safe trade. Again, if you look at Schwab, 60 is probably almost a 3 year low for it. So I doubt it would go below that. But again, it's a company I want to own. I love Schwab. So here I picked up 140, and let's now jump into the next section of this video, and we'll talk about how you can actually buy calls, and I can use this exact money to buy the call. So stay tuned. Let's jump into that. Okay, now I've jumped into Schwab, and this is today. And just so you guys know, I literally, when I started this video, the market was down 300 or 400 points, and now it's way up. I think it's up 600-700 points. So it's out of a huge turnaround. So I'm not sure I'm going to make a trade, because I would pay a lot more for a call today compared to just a couple of hours ago. So, but my two favorites, or two of my favorite investments, are SCHD and GLW. GLW is Corning. So let's jump into SCHD first, and that's the Schwab U.S. Dividend Equity Fund. And what I like about it is all the companies it invests in are not just dividend payers, but they're dividend growers. So one of the priorities it sets is to be sure that any company that's in its portfolio or dividend growers. I'm not sure of the index that it's based off of, but that's partly why it does so well. And you can see here Morningstar loves them. I mean, they've got 5 stars, and you can see it's definitely near a 1-year low, and it's approaching a 3-year low. So, if I could pick it up around $60, that would be really good. Now, if I look at options and I go to 16 strikes, I just want to show you an example. So I'd go a little farther out, probably January 23 or maybe even April 23. So if I wanted to buy this, again, I believe it's right at 68.44. So you're talking almost $7,000 to invest in it, or 6,800 if you bought 100 shares. Which I like to buy 100 shares, because that's what you need to sell options, and I think everyone should be selling options, especially covered calls. And this ETF is a really good one for selling options on. So here you can actually see, and again, it's showing 410. So for 410, I could pick up this ETF at $68. I could spend a little bit more, like $5. Now, literally an hour ago or 2 hours ago, this was half as much. So I think it was around 250 to 300. You could pick up a 66 or 65 strike. So, and what happens is, so you can buy it just like, let's just look. Let's say, well, I only wanted to spend $400. I could say click trade. And so here you can see the bid and ask is right around 510 to 590, but I would only be spending that amount of money to buy it. And down the road, let's actually set this up so you can see it. So let's say buy to open, since we're going to be buying the contract, and it's a call, and I'll do it as a market order. So I would pay about 580, but that would give me the ability to actually buy it at $66. Now, if the market recovers and it goes back to its, mid 70s or maybe even the 80s, the value of this call that I purchased will also go up. So I might be able to sell it for 11 or 1200, or actually assign it or have it assigned to me so I own those shares because I want to pick up the dividend since I'm a dividend investor. So, that's the beauty of that. And again, I like SEHD. It pays close to, I think, almost 3.25 dividend, which is really good. The other one that I was talking about is Corning, GLW. I don't know why it's GLW. It seems kind of interesting that it's Corning, but its ticker symbol is GLW. And you can see it's near its 52-week low. Yeah, so you can see if you can pick it up below 30, you're doing well. Let's look at 5-year. Yeah, so it hit back in 2020 below 30. But it rarely went below 30. So 5 years, you're picking it up, and it pays a pretty good dividend. We can go down here to see the dividends. Let's see. Got to go down a little farther. And I believe it's a dividend aristocrat, so it pays almost 3.6? Yeah, almost 3.6%. And let's see, I believe it's increasing it every year. Yeah, so it's a dividend aristocrat, so it literally increases it every year. So it's also another one that I really like. You can see its 3-year growth rate is over 10%, 12% for 5-year, 10 years right at 10%. So it's a good company to own, and it doesn't move that much either. Since I've owned it and sold options on it, it seems to stay between 30 and 35. So let's jump back and let's look at the options and see this is a $30 stock. So you can actually buy options. Again, let's go a little farther out. It doesn't make sense to do it too soon. So let's go out to January again. You can see they do weekly options. So for selling calls, it works out really well because they have a lot more expirations that you can choose from. So another great company. Again, I can't emphasize enough how good Corning is. And again, it's way under what it should be priced at. So here you can see literally at $30, which I'd be happy to own it. Let's jump on trade. And we could say I want to buy again, buy to open. And I can say market order, and it would be 265. And again, just like with SEHD, if its price recovers and goes up to the mid 30s, high 30s, the value of this option will also increase. So if you don't want to buy the stock, you can also make money, on what you've purchased, on this call option that you purchased. So it makes it, and being able to use $265, and again, an hour or two ago, it was probably half this. It was probably $130 because you can see at the bottom of the screen the market's way up. So you can buy a bunch of these options for very little money. For the two we just looked at, I think we're around $700. You could pick one or two others. Now I did from the vertical put credit spread that I sold. I picked up 140. But again, an hour ago I could have purchase this, but if I purchased this now and I had just made 140, it would only be 135. And you can see I do have some cash. This is actually a retirement account. I believe it's a Roth IRA or a rollover IRA. So that's it. It's, and that's where the it can help you with, doing. You can pick up more cash, and you can do this dollar cost averaging. Excuse me, I've got a cold. I came to Hilton Head and ended up getting a cold. But you can also do this dollar cost averaging by selling these options and buying these calls, as well as even buying shares. I have Lumen just hit a new low, and I bought some Lumen shares because they're so inexpensive. And I do still like Lumen. I think it's going to come back. So it's another way to do dollar cost averaging by selling, the puts, and then by buying these, because again, when the market rebounds, you're going to see it increase pretty significantly. So hope you enjoyed this. I hope you come back. And as always, please subscribe, hit that like button. I have memberships below. Take a look. You might be interested. My more expensive $25 membership, actually, you get a weekly call, 15 minutes of coaching comes with it. So, again, have a great day. Thanks for joining me.